Is buying on the Gold Coast a smart move in 2025? You might have seen the headlines. Prices have exploded nearly 90% in 5 years, with the median house price just over a whopping $1.1 million, making the Gold Coast second only to Sydney. You gotta ask, is the boom over or are we just getting started? What's fueling the fire on the Gold Coast property market? It's a bit of a potent mix. Australia's fastest growing city, economically pulling people in, that classic Gold Coast geography, squeezing supply super tight. Think of all the constraints. There's beaches, canals, there's not heaps of land to go, near the coast anyway, and rental vacancy rates near a tiny 1%. Not just that, investors are seeing solid 4 to 5% rental yields and they're looking pretty tempting. Plus massive infrastructure investment like light rail pushing towards the airport and the new Coomera Hospital promising even more growth. But you're probably wondering, is there any gas left in the Gold Coast property market? Today, we're going to dive deep into that question. We're going to go through the specific suburbs where it looks like there's still a bit to go and hopefully find some opportunities for genuine growth. Stick with me, we're going to unpack the Gold Coast property market in 2025 and find out where you should be looking for your next investment or possible home. And before I do, if you get any value from this video, smash that subscribe button, hit the like, it means a lot to me and the channel. So let's dive right in. The Gold Coast property market definitely kept its foot on the gas in 2024 and into 2025. We're now seeing the median house price creep up past $1.17 million. That's insane. It puts the Gold Coast ahead of other capital cities in Australia. Even units on the Gold Coast aren't cheap anymore. They're averaging a median price of $760,000. Experts like Simon Presley from Propertyology reckons the Gold Coast still has a bit to go, tipping another 10 to 13% growth for houses in 2025. He's pointing mostly to tight supply, which we've talked about, and the booming local economy. And you can see that demand playing out everywhere. Properties are getting snapped up really quickly as well. They're only lasting 25 to 30 days on market on average, which is down from 45 days just a year ago. Head to an auction in one of the popular spots and you'll often see clearance rates hitting 70 to 80%. Buyers are definitely competing pretty hard. But will the Gold Coast property market stay like this, or are we going to see a downturn in the market? Here's why it's looking not very likely. There are some huge infrastructure projects happening, especially in the gear up for the 2032 Brisbane Olympics. You've got the next stages of the G-Link tram explosion rolling out, connecting Broadbeach to Burleigh Heads, and then eventually pushing down to the airport. There's also ongoing upgrades of the M1 Pacific Motorway, making commuting easier. Plus, there's that huge $1.3 billion Coomera Health Precinct with new hospitals opening its doors from 2027. It's already giving local property prices a bit of a nudge. And it's really important to understand that the Gold Coast isn't just about tourism anymore. We're seeing real strength in sectors like education, health, and professional services. These are creating year-round jobs and attracting people who want to live here on the Gold Coast long term. The population has jumped by 100,000 people since just 2020. Many have migrated interstate, chasing that beach lifestyle. So the bottom line, you've got these powerful economic forces, huge transformative infrastructure projects, and a growing population all pushing demand higher. As an investor looking to the Gold Coast in 2025, your main job is figuring out which specific suburbs are best positioned to ride that wave. And that's what we're here to do in this video. Let me be clear about one thing in this video. Not everyone on the Gold Coast offers the same deal when you're investing. Some spots are going to offer a promise for better growth than others. On the other hand, others might have stronger rental returns, and just some might offer better value for money. So based on all the latest data, I'm going to take you through what's out there in the market and narrow it down to 5 suburbs that I think are worth another look at. Each one's going to have its own flavor and benefits. Maybe you're going to want that high-end waterfront lifestyle, maybe you want something affordable into the market, maybe you just want to be near the beach. But these suburbs all share some solid basics. They've got strong demand, high supply, decent rental returns, and just something extra makes them stand out from the other Gold Coast properties. The first one up is Bundall, and this one you're going to think premium waterfront living. This place really stands out as Gold Coast's top tier established suburb as you head into 2025, especially if you're trying to think about those beautiful homes right on the water. The nice thing about Bundall is it's minutes away from surface paradise, and it's quickly become the place with buyers with pretty deep pockets. Demand is seriously outweighing supply here. The score to measuring that, the demand to supply ratio or DSR, is way up at an impressive 66, which tells us competition among buyers is fierce. And yeah, this isn't going to be your first homeowner territory. The median house price is currently $2.18 million, reflecting just how exclusive and expensive it is. But surprisingly, investors are still managing to get pretty high rental yields, which is pretty remarkable given how expensive the area is. Vacancy rate stayed pretty tight at 2.3%, a bit higher than the Gold Coast average, but still will provide pretty steady rental income. Bundall shines if you're looking for long-term capital growth, backed by the fundamentals. Looking closer at the local market, you're going to see it's mostly those upscale detached houses, often those prized, canal front homes, because the suburb itself is hemmed in by waterways and the racecourse. Because of its geography, it's got pretty little land, making it pretty competitive to get into the market. You want proof of that? Well, auction clearance rates in Bundall are nearly at a perfect 100%. If a good property comes up, it sells. Properties typically spend 50 days on the market, which shows buyers are pretty ready to act when the right one comes up. The people living here are mostly affluent professionals and families. They're drawn here by the quiet vibe and the central location. All these factors have helped property prices grow here by 21%, easily outpacing the Gold Coast's wider average. Now back at the rental returns, despite the premium, Bundall delivers surprisingly well. A typical 4-bedroom waterfront house would get a weekly rent of between $1,800 to $2,000. That generates yields close to 5% that I mentioned, so it's quite something. As I mentioned, with the vacancy rate of 2.3% and 27% of the population being renters, investment properties rarely sit empty for a long time. Tenants tend to be high-income professionals or families relocating who want to be close to Southport or just good schools. Just keep in mind, most people in Bundall do own their own homes, so the main goal in buying a bundle is going to be capital appreciation, topped off by some reliable rental income. What keeps driving Bundall's growth? Well, it's its central location. It sits right next door to Hoda, the home of the arts precinct, which attracts over 1 million visitors a year. That adds a pretty big appeal for lifestyle, and there's future infrastructure plans, like stage 4 of the Gold Coast Light Rail extension, making getting around even easier. On top of that, Bundall seems to consistently pull interstate investors, people from Sydney and Melbourne who see value in buying a house there for say $2 million compared to what you're going to buy interstate. The ongoing migration interstate has really added a lot of fuel to that property value fire. So what are the opportunities and risks here? Well, Bundall's ideal if you've got the capital, obviously, and you're looking for a premium, stable growth property coupled with some attractive rental returns. Most opportunities are going to lie with the capital appreciation, the value's going up. A lot of the houses are older, so you could find some renovation potential, but that can sometimes come at a premium as well. Geographically, with the way the suburb is set up, it's going to be unlikely to be affected by oversupply in the future, but the potential downsides are obvious. With a median house price over $2 million, it's pretty expensive to get in, and you're not going to be able to diversify your investments. Premium markets like this could be more sensitive to a broader economic downturns, but still looking back, Bundall's shown a lot of resilience and tends to hold its value, often recovering quicker than other areas on the Gold Coast. So the takeaway here, if you're targeting capital growth and premium rental income on the Gold Coast and your budget is over $2 million, Bundall is definitely a standout suburb on the Gold Coast and the location worth looking at in 2025. Mudgeeraba. Next up, let's talk about Mudgeeraba. If you're looking for a really solid family-friendly suburb that balances reliable stability with good growth potential, Mudgeeraba has become a bit of a favorite on the Gold Coast in 2025. The median house price has climbed steadily and sits at about $1.17 million now, and reflects just how popular the suburb has become. Demand is still very strong. The DSR score is 58, meaning there's plenty of buyer interest for homes that are available, and places tend to sell pretty quickly, typically in 38 days. For investors, the numbers look pretty appealing too. You're looking at a solid rental yield of 4.4%, combined with a really low vacancy rate. Get this, just 0.35%. Yeah, crazy low. Mudgeeraba shapes up as a low risk option depending on capital growth and strong rental income, making it ideal if you're a more cautious investor. What's it like on the ground? Well, Mudgeeraba really holds on to that kind of nice village feel, which is a big draw card for families, and if you're looking for more space and a bit of a sense for community. It's pretty close from Robina, it's a bit more inland, so it's about 13 k's from the beach at Broadbeach, but gives you a bit of a nice blend of suburb, and you can still get to the Gold Coast CBD. Development in Mudgeeraba is quite controlled. It's predominantly low-rise detached houses, which keeps supply pretty short compared to obviously in Surface where it's all big towers. Around 76 of people living here actually own their own homes, which means that there's far less properties that tend to come up for sale. Importantly, even with the median house price at that $1.17 million mark, Mudgeeraba still offers significant better value than its neighbouring suburbs like Robina or Burleigh. The market is really attractive for buyers who might be priced out of those more expensive suburbs. A typical 4-bedroom home in Mudgeeraba rents for about $900 to $1,000 a week, giving a gross rental yield of about 4.4%. Tenants here tend to be pretty stable too, mostly long-term families who choose the area for good schools and the lifestyle. This generally means tenant turnover is much lower and you can have more consistent income stream on your rental property. What about future growth drivers? Well, infrastructure continues to play a big role here. There's a major redevelopment of the Mudgeeraba town centre underway, which is valued at about $150 million and promises new shops, place to eat and better community facilities. Plus, being close to Robina means that there's a huge benefit of the huge town centre there. There's a shopping centre, hospital, train, you've got the lot. You've also got quick access to the M1 motorway, so if you are commuting to Brisbane, Mudgeeraba is a pretty straightforward one. You're not having to sort of go off the highway as it's like when you're in Broadbeach or those other areas. Good local schools remain a pretty big draw card, and having Bond University nearby also adds another layer of appeal for families and academics. So looking at the opportunities and risks, Mudgeeraba is pretty good if you're looking at steady growth rather than trying to make a quick speculative gain. And those older properties here give excellent potential for value adding renovations. The suburb also has some pretty strict zoning which limits any massive new multi-story developments, adding its reliability for long-term investors. But what about the risks? It's actually pretty minimal. The rapid pace of growth that we've seen lately might slow down to a more moderate pace, which is normal. And like anywhere, these areas are going to be susceptible to interest rate increases, so that could dampen demand if people are having to pay more for their mortgages. I think at the end of the day, Mudgeeraba's appeal to families makes the location pretty resilient. The bottom line is for investors looking for a lower risk, reliable growth, with consistent family demand and strong rental metrics, Mudgeeraba could be a really good choice for a Gold Coast property investment in 2025. All right, number 3 on our list is Oxenford, and specifically we're looking at units here. If you're hunting for an investment on the Gold Coast that's more affordable, but still packs a good punch in terms of growth potential, then Oxenford units definitely deserve your attention right now. Now, you might only know Oxenford for being the home of Movie World and Wet n Wild, but the northern suburb of the Gold Coast has really emerged as a popular choice for first home buyers and smart people heading into 2025. Units here currently sit around $659,000, which is a lot lower than trying to buy in the beach. But it's not just about price here, demand is pretty fierce. The DSR score is 61, meaning it's very competitive and buyers are seriously strong. Properties here tend to get snapped up quickly too, typically selling in just 25 days. And for investors, the yields are pretty attractive, hovering at about 4.9%. So Oxenford is managing to deliver both strong returns now and potentially deliver some pretty impressive capital growth down the line. What's the area like? Well, it's located 20 k's north of Surfers Paradise, so it's well positioned if you want affordability without being completely disconnected from key amenities. While it used to be mostly detached houses, recent years have seen townhouses and units become increasingly popular. And what's interesting is that it attracts almost equal numbers of home buyers and investors, so the demand is pretty balanced and keeps the market fairly stable. You've also got major local employers here, like the theme parks, and more importantly, the Coomera Hospital that's coming up, which pretty much will potentially guarantee steady rental demand. Supply is incredibly tight right now, so only 0.3% of units are actively listed for sale, highlighting just how intense and how limited the supply is right now. All right, so let's talk rental, because Oxenford units here really shine for investors as well. As I mentioned, the rental yield is about 4.9%, and a typical 2-bedroom unit might rent for around $600 a week. The vacancies are insanely low at 0.89%, and tenants usually are a bit of a mix of families, healthcare professionals, and employees from local businesses and the theme parks. One thing you do need to keep an eye on for the units is body corporate fees. In Oxenford, they tend to be lower compared to the big coastal high-rises, which makes it a great spot if you're chasing cash flow without having to pay $50 or $100 a week, which you can sometimes see on those ones that are near the beach. What about the future? I think the suburb massively benefits from the infrastructure going on. You've got the $1.5 billion upgrade to the M1 motorway and the new Coomera Connector Road, both improving access to Brisbane and the rest of the Gold Coast. Just up the road, there's the Westfield Coomera Shopping Centre, bringing more retail and options, and the really big one, like the biggest one, is the $1.3 billion Coomera Health Precinct. That's going to be anchored by the new hospital opening in 2027. We've seen it time and time again, happen at Robina, seen on the Sunshine Coast. Hospital precincts really do big things for property prices because it brings professionals, it brings students, brings all sorts of people there, and lots of demand. Not just that, if there's any transportation improvements linked to the 2032 Olympics, it's potentially going to help Oxenford in the future. So putting it all together, for an investor, Oxenford really offers a pretty compelling blend of affordability right now, strong rental returns, and potential for future capital gains. Because unit prices are still well below the broader Gold Coast median, there's potentially more room for demand, and targeting an old unit could do you pretty well. But that's not to say there aren't risks. There's also the possibility of oversupply if people start building more and more units in the area because of the different zoning. It could mean that you get watered out a little bit and the capital gain growth could be diluted. Being an inland suburb, obviously away from the beach, it's always going to trade at a much lower premium than those coastal spots. The bottom line is Oxenford really represents great value if you're looking for affordability, exceptional rental, and demand driven by jobs and infrastructure, and potential for capital growth there depending on what happens with the hospital and that future infrastructure for the 2032 Olympics. All right, let's talk about Ashmore. You could say this is one of the Gold Coast suburbs that's really started stepping into the spotlight, finally getting attention that it deserves, because it's just 4 k's away from Southport's busy CBD. And the big appeal here is value. You've got a really central location, but without having to pay the flashy prices you're gonna see closer to the coast. House prices here have jumped massively, over 20% recently, pushing the median house price to $1.09 million. That might sound like a lot, but compare that to its pricier neighbor Bundall, which has a median house price of $2.1 million, or even Benoa at $1.3 million, and you'll see why Ashmore really offers some good value. For investors, these numbers stack up pretty nicely too. Vacancy rates are really low at 1.2%, and rental yields are at about 4%. Simply put, your money's going to go a lot further in Ashmore, and there's plenty of room for growth. So what's Ashmore like? Well, think leafy streets. They actually have pretty big blocks, 600 to 800 square meters, and generally a bit more of a quiet, family-friendly vibe. It was mostly developed back in the 1970s, so it definitely has a different feel to the high-rise suburbs you're going to see close to the beach. For a while, Ashmore flew under the radar, but a few smart buyers and people potentially moving into state have caught on, and the buying gap has decreased. It's gotten more expensive and really caught up to some of those suburbs nearby. Houses are selling quickly, and often multiple offers can be flying around, so investors definitely have become more and more keen. Renovators really love the suburb because, like I said, there's a lot of places built in the 70s and you can potentially add a lot of value and your own stamp to every house. The other thing like these suburbs is there's virtually no new land in Ashmore, so the housing supply is effectively capped. That's naturally continued to support strong demand and housing price appreciation over the long term. What about the rent side? Well, rentals don't stay empty for long. The median weekly rent for a house is sitting around $850, giving you a yield of about 4%. Or if you buy and add value through renovation, you could push that yield up to 4.3%. Again, tenants are pretty stable. You've got the hospital nearby, the Gold Coast University Hospital. You get students from Griffith, young families and retirees who like that quite a charm. Yeah, I think the main negative is a lot of houses are older, that's going to need maintenance, but potentially might get a bit cheaper than some of those neighboring suburbs. Now, Ashmore doesn't have any flashy new developments right within its boundaries, but its strength lies where it's positioned. Can kind of leverage all the infrastructure nearby. So just to the north, you've got the massive Gold Coast Health Precinct. This is home to the major hospitals and the Griffith University, literally just minutes away. Southport CBD and Tramlink are pretty close, so it's easy to get around. And major roads like Smith Street and Ashmore Road make commuting pretty easy if you're driving around. So as an investor, Ashmore could be ideal if you want some capital growth, but there are some risks you need to manage. The most common strategy we see in Ashmore is people buying undervalued property and trying to put some money into it and appreciating the value, especially if they're older houses, kitchens that are tired and needs a bit of carpet, because oftentimes you're getting a block on 700 to 800 square meters. But as with everything, there are risks, so you need to do your own research and make sure you're comfortable before making these decisions. I think Ashmore does have massive value. It's in a really central location and has growth potential heading into 2025. So if you're looking for something around this price point, it's worth having another look at. All right, so let's wrap up with our final 5 on Tugun. Tugun's becoming a really popular choice for buyers and investors who are chasing that coastal vibe, but are looking for better value compared to all those northern neighbors. Now, the median unit price here over the last 12 months was $900,000, though the typical value might be closer to $850,000. The crazy thing in Tugun has been actually the rental growth. It's up nearly 25% year on year. On top of that, vacancy rate is at a tight 1.26%, and the average rental yield is at 4.27%. So Tugun's showing some pretty strong returns for relative affordability compared to the nearby locations. What's it like? Well, it's got that villagey atmosphere. Think local small beachside cafes, some boutique shops, and a pretty tight-knit community feel. It's sandwiched between Currumbin and Coolangatta, so it's gaining traction because of its relative affordability. It's a fairly small sized suburb, so it keeps a bit of a supply on the supply there too, and properties tend to sell pretty quickly, just in 27 days. Demand for the area is quite diverse. You're going to see young professionals, retirees, families, and people moving from interstate, wanting a piece of that laid-back charm. And while being close to the airport does put some people off, like it's genuinely loud when the planes are going overhead, if you're in a more modern unit, there's going to be soundproofing and double glazed windows, and just being close to the airport can be enough to put off balance those extra noises. I think it's worth diving deeper into the rental because 24.8% rental growth is pretty crazy. Rentals in Tugun, like I said, get snapped up fast. With a vacancy rate of 1.26%, units typically gross around 4%. You need to really do your research here. 2 bedrooms rent for $600 to $650 a week, 3 bedrooms around $800. There is a bit of a mix of renters. There are some FIFO workers who need access to the airport. You might have people that just want to be near the beach, but it is a pretty good location if you look at it on the map. Looking ahead, there are some big developments in the pipeline. The standout is the expansion of the Gold Coast Airport nearby, which means more jobs, increased convenience to locals, and more capacity there. There's also plans to eventually extend the Gold Coast Light Rail through Tugun towards Coolangatta, and if and when that will happen is really going to help the suburb because it means you can potentially get to the airport, or if you live in Tugun, get all the way down the other end of the coast and to the heavy rail, which is massive. The Tugun bypass, which happened ages ago, has already done a lot to really enhance that villagey feel. Before that, the highway literally passed through and it was not a very nice place, whereas now the highway goes around and it has a bit of a ripple effect on buyers. If you get priced out on the more northern end of the Gold Coast, that southern end is going to give you a bit more value. Tugun offers unit buyers a potential to get into the market without having to pay over $1 million, like you see on some of those other suburbs in the Gold Coast. It's definitely got some of the fundamentals there happening. There is a bit of a dip in sales, so it could represent good buying opportunities now. But do your due diligence, spend some time there because the airport and the aerial noise can be off-putting for a lot of people, which is probably one of the biggest risks. That proximity to the airport is a pretty big factor for a lot of people. So beyond these top 5 picks that we've gone through, there are definitely a few other suburbs showing promise that are worth keeping an eye on. They may not be getting all the headlines, but they've got some solid fundamentals that's worth looking at. First off, let's talk about Southport, known as the Gold Coast traditional CBD. It's made a bit of a resurgence. We're seeing prices jump up recently. Houses are up 16% and units are up 18% just last year. So you're looking at around $1.06 million for a typical house and $680 for a unit, which is still pretty good value considering how central it is. With the light rail running through, it's already got a lot of redevelopment going on. There's education precincts, upgraded parks, and Southport's transforming into a bit more of a hub than what it was before. You sort of just go through it and not spend much time there. There's Pacific Pines that continues to stand out. It's a pretty popular spot for family and relatively affordable. The median house price is around $975,000. It is appreciating pretty quickly. Prices were up 13% last year alone, and over the last decade, prices are up 134%. It's got heaps of parks, good access to M1, and could be a good one to check out. Heading further north into that growth corridor, you've got areas like Ormo and Upper Coomera. They're attracting a lot of home buyers and people that might be priced out of the Gold Coast or might just need to commute to Brisbane and want to be a bit closer. They offer homes from around the $900,000 mark. And I guess the big one is, the M1, like I mentioned, and the new Pimpama train station, which is set to open later this year in 2025, making commuting a bit easier. And definitely don't overlook Helensvale. Sometimes it gets missed, but it's actually one of those locations that has great connectivity. You can pretty much get to the Gold Coast. You can go to Brisbane if you need to drive, but the median house price represents that. It's around $1.19 million, and units are close to 682,000. Which units have really pushed a lot of that growth. They've jumped 29%, so investors are seeing a lot of potential there. And finally, I definitely suggest keeping an eye on Mullendina as well. The suburb's been pretty quiet. It's on sort of the shadows of Ashmore, which we covered earlier, but it's getting attention because of the location. It's pretty close to Griffith Uni and also has good access to the M1. House prices are up 18% last year, and it remains, I guess, relatively affordable at $1.1 million. It's got a bit of a mix of residential and industrial properties, but it's definitely seeing investors look back there just because of physically where it is. So as you can see, the Gold Coast property market in 2025 is offering investors potentially some value there. There are lots of different factors. It's not just a tourism economy anymore, and looking at some of those infrastructure projects could help set up your investment over the next 10 years. Now, obviously this is general only. We're just talking at suburb level. You need to then take your research that next step further. You need to understand what different streets are like, what the properties are like, and how it's all going to fit into your personal investment strategy and budget. If you're serious about investing or thinking about it as a place for a future home, definitely worth having a look at. If you do need help with finance, at Hunter Galloway, we're the home for home buyers across Australia. If you need some investment advice, we can assist with that. Hit us up at huntergalloway.com.au. We can help you understand your borrowing capacity, look at how to structure it and how to set things up if you're looking at buying into a long-term investment or a home one day. Thanks so much for watching the video. I hope you enjoyed it. And if you have any questions, leave a comment below. Till next time, see you guys.